It's a mega cap stock, and as a company, it's too big. These are some of the common reasons thrown against Apple. But brush off Apple stock at your own risk. Here's why. Before I share with you my reason, if you are new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. If you want more videos such as this, make sure to subscribe to my channel because each week I release new videos about investing, trading, and the stock market. Apple is one of 4 big tech companies in the US stock market, and they're commonly known as the MAGA stock. So we have Microsoft, Apple, Google, and Amazon. Let's first take a look at where Apple is currently at. So if you see right now, Apple is currently at a price level of around $178. So if we take our price to over here, from its peak over here to where prices are currently at right now, we see that Apple is only slightly below 2% of its all-time highs. And if we were to compare Apple stock against the other MAGA companies, so let's first take a look at Microsoft. If we take our 2 over here, we see that Microsoft is currently 10% away from its all-time highs. And for Google, we take our 2 again, and click over here to where prices are currently at right now. We see that Google is around 6% off its all-time highs. And the last one will be Amazon. So for Amazon over here, we take our price to, and then where prices are currently at is around this level. So you can see that Amazon is currently around 11% away from its all-time highs. So if we were to compare the price chart of all these MAGA stocks, we see that Apple price chart is the one that looks the strongest, and the reason why is because right now, Apple is only about less than 2% away from its all-time highs. So while the other MAGA stocks are still trying to climb their way back up to their all-time highs, Apple is already about there. And I won't be surprised if Apple makes a new all-time highs in the near future. So that's the first reason. For the second reason, we take a look at Apple's relative strength line. If you don't know what the relative strength line is, you can check out my video at the top right of your screen where I break down exactly what the relative strength line is and how you can use the relative strength line for your own investing and trading. In a nutshell, the relative strength line is an indication of how the particular stock, in this case Apple stock, performs against the overall US stock market, so against the S&P 500. So if a stock's relative strength line is on an uptrend and is making all-time highs, this means that the stock is performing very well against the S&P 500 during that period of time. And if we take a look at Apple's relative strength line right now over here, we see that the RS line for Apple stock is close to its all-time highs. And how do we know? We take a look at the blue dots on the relative strength line. So over here we had some blue dots, and then over here we had the blue dot. So basically what the blue dot indicates is that at that point in time, the RS line is at its all-time highs. This was the all-time highs for the relative strength line. So if you look to the left side of the chart, you'll notice that this was the highest point. And similarly, at this point, this was the highest point because this point was higher than this point. And that is why the RS line is at its all-time highs over here. And right now, we see that the RS line is just a bit below its all-time highs. And if Apple stock continues its trajectory, we could see new all-time highs being made for its RS line as well. The third reason why I believe that if you brush off Apple stock right now, you're doing it so at your own risk. And the reason is because of the high inflationary environment that we are experiencing right now. Now wait, you might be thinking, wouldn't a high inflationary environment affect tech stocks the most? And Apple is a tech stock, so wouldn't Apple stock be heavily affected by the high inflationary environment? That's a valid question. But Apple is not just any tech stock. And these are the 2 distinguishing factors that separates Apple from most other tech stocks. The first is Apple is already profitable. In fact, Apple has one of the largest cash reserves in the world. And companies that are already profitable tend to hold up better than companies who are not making any profits during this high inflationary environment. The second and more important reason is because Apple has the pricing power. I believe no one can deny that Apple has an economic moat around its products and services. Yes, Apple has a lot of competitors, but there's no denying that Apple has a special allure about its products and services, and it also has a strong loyal customer base. And this gives Apple an economic moat. So even if Apple raises prices, most of us will still continue to buy Apple products and services. And this is the kind of pricing power that Apple has that can allow it to not just survive but also thrive during this kind of environment. And that is why if you want to brush off Apple as a mega cap stock and a large company, and that its stock price can't continue to move up substantially, do so at your own risk. So hopefully you've enjoyed and learned something from this video. If you did, smash the like button because it will really help the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, make sure you join my Facebook and Telegram groups because in those groups, I share with you my weekly stock ideas, tips, and market updates. And you can join those groups by clicking on the links down in the description below. I'll see you in the other videos to your financial success.